Well, welcome back to another episode of Insurance Gone Wild. I am your host, Dennis, and this is co-host
Stephanie.
Dennis and Stephanie. It's a Dennis and Stephanie show. Actually, it's Insurance Gone Wild, where we try our best to help regular, everyday people understand the ins and outs of insurance, whether that be home and auto, commercial, health, life, Medicare, bonds, whatever it may be. We want to help those listening to understand how in the world does this insurance stuff work, or whatever adjective you would like to use.
Yes.
In that, right?
Yes.
Instead of stuff.
Yeah.
So anyway, we have a special guest today, our very first special guest.
Yes.
So his name is Stephen Pierce. He is 24 years old, just graduated from Missouri State University.
His social security number is.
That's right.
Gosh,
Missouri State University out of Springfield, Missouri, with a degree in what?
Finance.
So Stephen is down here visiting with us. And I got to say, he's actually my nephew. And I've been taking around visiting people today. And I said, hey, I'm going to go record a podcast. Why don't you come with me?
Done.
And you get to meet Stephanie and see how crazy she is. And off camera, off air, it's an interesting conversation.
Listen, I think I've held back decently. Stephen?
I think you're doing fine.
Thank you.
Exactly. Well, we warned him about you already. So
well, see, it's expectations like we were talking
That's
about.
right.
It's like, this is what I expect. Do you fall? Did you meet or exceed or not yet meet?
That's right. I even told him about thing 1 and thing 2.
Oh, they've been a lot today.
I told him how different they were. Thing 1 and thing 2. That would be her kids. And so anyway, I was glad to see him. Thing 2 gave me a big hug. So
Absolutely adorable.
that was good.
Thank
But
you.
Stephen didn't know if he wanted to get on with us today or not, right? So I'm
We're
like,
pretty
no.
intimidating, and
Yeah.
I get that.
Yeah.
I get that. Yeah.
Put him on. So he's got his own mic. He's got his camera. Hopefully we can see his pretty face. But as a young person, we wanted him to have an opportunity to ask, Stephen, you've never had to do your own insurance as of yet. And that's not uncommon. You've been on mom and dad's insurance for auto. You don't own a home yet. Did you do any type of renter's insurance?
I did get renter's insurance. It was from a friend's father.
Okay.
And he did very well.
That's when you were in Springfield. Okay.
Yes.
So doesn't matter what company it was with, but did he tell you any of the coverages that were involved with what, like if this happened, you'd have coverage?
Yes, he did.
Do you remember any of those? And I'm kind of putting you on the spot a little bit.
No, that's fine. He asked me how much I would need and if I had anything that was worth it, because he was trying to give me the best deal possible.
Sure.
Obviously. So he would ask me like, do you have any gaming systems? More stuff that kids around my age would have. And we talked it out and we agreed on a policy number. And then he actually wrote up his own policy and then sold it to us for, I think it was a yearly. It was a yearly payment.
Yeah, more than likely it was a 1 year policy. Yeah, and that's part of what we do as agents is we want to get a feel for, okay, this company, probably the minimum they go is $5,000 worth of coverage. But if you have $15,000 worth of stuff, that's probably not the right policy for you, you know. And it was fairly inexpensive too, your renter's insurance, I'm guessing. Yeah. And I don't know what it would be up there, and it doesn't really matter. But renter's insurance usually doesn't cost much at all. No. And it can give you a huge upside if you have a claim. But were there any things during that process that he said that you were kind of like, I had no idea how that worked, or did you have questions for him on how does this work?
One thing I did ask him is, so what does it do? Just cover like your basic natural disasters and stuff like that? And he said yes. And I said, well, I live in a college town now. So what if my apartment gets broken into? That's what I was mainly concerned. I wasn't really worried about the disasters because I'll figure it out. But just my house getting broken into, if I losing like my special identifying documents, it's hard to get back. So I was more worried about that. But then he reassured me and said, no, I actually wrote it in there that we would cover that. And so I was very happy about that.
No, that's right. Because most policies, that's what they're for, is for physical damage to your personal possessions. That's what and theft is part of that. Also, if on a college campus, if things got crazy and people came through and vandalized and destroyed stuff, you'd have vandalism coverage too. And so in most policies, so no, that's good. That's good. Well, as you look to get out on your own, because I know you drove down here in your truck, you don't have a home yet, but you've already learned a little bit from a renter's policy. What questions do you have for us, or what questions at your age, probably getting ready to come off mom and dad's insurance at some point here in the very near future? Hint, hint. But what questions do you have as you start looking at that? Going to that next step of adulthood, let's call it. I don't know what else to call it.
I'm kind of concerned about auto insurance
Mm-hmm.
because especially at me being like, let's say 25,
Mm-hmm.
it's supposed to go down. How do you know whether to go with the cheapest or the most expensive? Like, which one's giving the best coverage? Is there a middle ground, or should I just go for the smallest and save money?
That's a good question. You don't have any assets, so you could go with the smallest and save money on your premium, but it does not, by going with the smallest amount of coverage, it does not shirk your responsibilities in the event that you caused the accident and you got to pay for other people's medical bills or their car because you destroyed their car.
Yeah, and there's something, if you go for the lowest in the state of Texas, and I don't know are you moving to Texas?
No.
Okay, that's a shame. But in the state of Texas, the state minimum is 30, 60, 25?
Mm-hmm.
So the first two numbers are bodily injury. 30 is per person. 60 is total for an accident.
Mm-hmm.
So if you have minimum coverage, in the state of Texas, I don't know what it is in Missouri, and you hit a family of 4 and you cause an accident, that means 60,000 only. Well, you can hit that really fast just with an ambulance ride and a couple hospital visits.
Mm-hmm.
And then, God forbid, they're actually successful professionals. So that 30,000, what people don't necessarily understand, that bodily injury claim. So this is one thing that I used to do with liability, but it covers 3 things, 3 main components: somebody's medical bills, somebody's lost wages, and pain and suffering. That right there adds up really fast. And no, being young, people don't typically have a ton of assets, but they can damn sure make sure you never will. Right. So there's that. So it's like, oh, I don't have anything and I never will because I've just hit a surgeon.
I'm writing a check for the rest of my life.
Absolutely. Or God forbid, a fatality or anything like that. And then that 25 is property damage. Well, COVID, thank you so much for this. But what car can you buy these days that's valued under $25,000?
Oh, you can't.
Not many. I mean, even used, whatever, 100,000 miles, you go on and you look for used cars. Are you about to look stuff up?
Yeah, I am, because I did this at a networking event a couple of years ago, and I had them pull out their phones, and I said, okay, go to Auto Trader and type in by budget, any budget. Let's see, price per vehicle. Let's say $25,000.
Okay, so while you look at that, let me just talk about the coverage for a second. So that 25,000, that property damage is only, it has nothing to do with your car. It has everything to do with anything outside of your vehicle that gets damaged.
Mm-hmm.
Well, how often? I mean, if something happens on the highway, you hit one car. If another car now gets involved, you only have 25,000. So even if nobody's injured, we still now only have a limit of 25,000 that's going to be covered, and that's going to go by so fast. And then to the other point of having minimum coverage is you can only protect yourself as well as you protect strangers. So I would always tell my clients when I was doing this, you can't sit there and say, oh, well, I'm going to have liability coverage of 30, 60, 25, but I want to be covered in case somebody hits me who's uninsured and have 100, 300. So I'm covered for at least 100,000, and then my family's covered, or people, my loved ones, 300,000. Doesn't work that way. You cannot protect strangers. You can't protect your family more than strangers. And conversely, I hate seeing coverages where people have 100, 300 for liability because they're protecting, and the agent did a great job of saying, hey, there's so much exposure. So for an extra $20 a month or whatever it is, protect yourself financially. But you should save money, and you can save in that underinsured, uninsured category, and you can have minimum limits for that. So then the question is, why would you ever protect strangers more than you would protect the loved ones in your car? So those to me should always match. So that would be something to keep in mind. Now, the property damage for you, and this only is pertaining to uninsured, underinsured. So if you have your truck, is it an older truck, newer truck?
It's about middle.
Okay, so do you think it's so on that one? It's I could do a $25,000 on my truck, right? Like my car's used, whatever the case, that's fine. Mm-hmm. You don't have to match that part because the only thing that one coverage is covering is one vehicle, and it's yours.
I got you.
Opposed to, well, I hit this car, and then they hit this car, and then they hit this car, and then they hit that sign, and then they hit a garage. That's endless. But that uninsured, underinsured property damage is solely that one car. So anyway, there's a little background on that, but Dennis is looking up. Did you find any?
Yeah. So a 50-mile radius of where we are right now.
Dallas-Fort Worth. So a lot of options. We're not in the sticks.
Well, we're also looking at 6 to 7 million people, right?
Yep.
6 to 7 million people.
Maybe more, but anyway.
Well, it's at least that many, 6
For
to
sure.
7 people,
Absolutely.
6 to 7 people. I'll get it out in a minute. 23,000 vehicles on Auto Trader under $25,000.
It's not a lot. And you're
not
talking
for 6 million people.
And you're talking a 2002 Nissan Sentra
Or a
with 170,000 miles.
Exactly.
Yeah. So
the
point
that's
is
just
that
the ones on Auto Trader.
Sure, I understand, but the point is you're not.
There's not many.
No, and the cars on the road. How many Teslas do you see driving around here? We have
in our
Teslas,
area,
Lexus, BMW, Mercedes.
Matter of fact, you were just
trucks.
asking me, do we see very many Tesla trucks? Yes, we see them.
We see them. They're. I mean,
wish I didn't, but we do. But
we do.
We do.
I see them all over the place now.
Yeah, I'm an old country boy, so I want a truck.
Yeah, sure. But yeah, that's. I don't know why they call that a truck. To me is like crossover, but that's fine. But yeah, so that 25,000 is going so fast, and then that bodily injury also so fast.
So in Missouri, the three numbers she's talking about. The first number is always how much the policy will pay per person, how much the policy will pay for medical bills, and the other two things she mentioned, the three things that she mentioned: medical bills, pain and suffering, and lost wages. The other thing, the second number is how much it will pay total per accident. So she said if you hit a family, the most it's going to pay is whatever that second number is. And then the last one is property damage, to fix their vehicle or any other property that you damaged, or replace their vehicle or any other property that needs to be replaced that you caused damage to. So it doesn't matter what those numbers are, that's what they mean. Now, it does matter what their numbers are in this case. In the state of Missouri, I think, because we're licensed in Missouri, I think it's 25, 50, 25. So you hear agents like us talk about these three numbers all the time. In Texas is 30, 60, 25, 30,000, 60,000, 25,000. Missouri, the most it'll pay is 25,000 per person, 50,000 per accident, 25,000 for the property damage that you caused. Now that's the minimum.
Yeah.
The state, you have to have at least that much. You don't have to have anything else on your policy. You got to have at least those. Liability only policy is what they call those. So the thing about that is, if you hit somebody and they go to the ER, chances are you're going to blow through all of that, or very much most of that 25,000 per person, just by them going to the ER, because that includes the ambulance, going to the ER. They jack the rates up.
It's $300 for a Band-Aid. And
when
I was doing
$200 for an aspirine,
when I was doing claims 10 years ago, 15 years ago, we would get some invoices. We had to review the medical bills, make sure it was, appropriate billing and all that or whatever, but reasonable. It had to be reasonable and necessary, right? Which, since we are insurance gone wild, did we talk about vaginitis last time? We can talk about it this time. So I'm reviewing these medical bills, but we would get some ambulance bills. And then some ambulance, they're not the fire department. It's the med stars and the other thing. They're private.
Which means price goes up.
They will send, and this was 15 years ago, $2,500 for an ambulance ride. That's just an ambulance ride. That has nothing to do with what's actually happened at the hospital. Mm-hmm. And then some of these people are like, oh my God, my neck. Oh, I can't talk. I can't walk. I need an ambulance, whatever. And then sometimes it's legitimate. Mm-hmm. Like, so anyway, yes, to your point, absolutely does go up. But just pause for a second on that, because we did have to review again to make sure we were paying for reasonable and necessary based on what happened with the accident. If we were claiming at fault. This woman done sent in her invoice and her medical records for her seeing a doctor for an itchy down their area. And the diagnosis was vaginitis, and she was trying to say that the car accident caused it. We denied it. I'm here to tell you. Anyway, so it's just interesting. Anyway.
Yeah. So
insurance won't pay for that.
Yeah.
Car insurance won't pay for that.
Well, yeah. I think
medical will.
I think we had talked about
we maybe did. Yeah.
I think we talked about it in another episode.
STDs and
and pregnancies, how they used to pay for pregnancies and stuff like that. Yeah. Insurance used to pay for pregnancy. Well, I'll say it real quick. Guy and a girl go out and have a good time. They ended up getting.
You don't know that they had a good time.
Well,
it's just what they did.
It's what they ended up having, getting in the back seat of the vehicle. 9 months later, they're having a baby, and they would go, oh, okay, well, that was a medical event that happened within the confines of the auto. So therefore, we're going to make an auto claim, and the insurance companies would pay it.
That's why you had so many babies named Chrysler and Ford back in the day.
Ford,
Sebring.
For sure. Yeah.
Anyway.
that used to happen. It doesn't happen anymore.
Yeah,
STDs and stuff like this. Well, I got it when I was in the back of a car, well, that's not happening anymore. So to go back to your question is, how do you make sure, should you get the cheapest or get a better coverage? I will tell you to get a better coverage, because yes, you have no assets, but if you do get sued, if you have an accident and you're at fault and you do get sued and you lose, the insurance company is only going to pay whatever their limit is, and they're out. Now, they will defend you up to that point, unless they go, he's got low limits, it's cheap for us, let's just write a check.
We're going to write a check and be gone.
And we're done. Because they have that option. They don't have to defend you. That is their defense. We're going to write a check. There's anything over that, you're on your own. You don't want that situation. You don't want it. So I would say a minimum get 100, 300, 100. Especially here in North Texas, where it's not uncommon to have a $100,000 vehicle. And if you hit somebody's $100,000 vehicle, a doctor, a lawyer, an insurance agent, somebody's got, and $100,000 vehicles aren't that big a deal anymore. Yeah. They used to be, right? Mm-hmm. I mean, you've got, my truck, your dad's truck, what they cost whenever we bought them, and they hold their value, right?
Yeah.
What's a brand new truck like this cost? The F-250 with a diesel. How much is it? 100,000 plus sometimes. If it's a Lariat or a Platinum, if it's a Platinum, it's definitely 125.
Oh yeah.
Probably. I know it's around at least 100 anymore for the new ones that are really nice. And down here, you see those a lot.
And just to interject for a second. So I would say
she's always interjecting.
I just am. I'm a woman. That's what I do. But I think there is that fine line of, okay, so my cousin is moving here from Georgia. She's coming to Texas in a couple weeks, and
she need insurance.
We already got her. Oh yeah, no, we already got Sarah. But it's the question of, okay, well, so I'm getting my own insurance, and I have my own apartment that I have to pay for, and then I have this I have to pay, and this I have to pay, and internet, and electricity, and this, like all of these bills are coming out at once, and you're like, I am panicking like as a young person going out and then having all of these new expenses. And I think there is a little, I think there's a fine line, right? And it's weighing and saying, because we can't get insurance that we can't afford. And there's usually not a huge discrepancy. If we have a good driving record, because that's another thing with young people, do they have a clean driving record? Because that right there, easily they're paying $350 a month to drive the Nissan Sentra, right? Because we've had 2 accidents and a speeding ticket and whatever. But we have to be able to afford it also to maintain the coverage. Does that make sense? So like,
no, it does.
We want the 100, 300, 100 as the minimum, but at the same time, if it is $100 cheaper for you to go at least to that second tier, that middle ground, which in Texas we have that 50, 100, then you got to go there. You got to make sure you can pay the bill.
No, I agree with that. And I was going to go there, but
this is why I interject.
no, actually, I'm glad you did.
Yeah.
I'm actually glad you did, because I was going to take the long route around to that. So,
So I've been there. Dennis, I know you.
I know. I over-explained.
I was buckling up for the...
I over-explained, but she's absolutely correct. There is a fine line. The deal is that you get with a reputable company, quote it, and as long as you're with a reputable company, then I think you're going to be okay. It may be that you have to bounce down to 50, 150. That's still acceptable, but it's more of a bare minimum. I would not go with state minimum liability limits. No, I would not do that ever. We don't write hardly any like that. That's not our clientele. Because, and I will say this, it is insurance gone wild, and we are here to help people understand. But one of the things that I have discovered is the folks that want state liability limits only are usually those that complain the most when things don't get paid. Because they were looking at
saving the now money and not looking down the road to see what is the purpose of why I'm getting this policy.
I want to save today and I'll take my chances. Well, they lost. Mm-hmm. They crapped out, taking the gamble. And now they're mad because the insurance company's not paying. Now, having said that, that's not everyone that does that, but it is the majority of those that complain that it didn't get paid. It's like, well, you didn't have this coverage. You were trying to save money. And I've had to have those conversations with people. You didn't want it. So with this agency now, when I had my own other agency, with this agency now, we make very sure that people understand if they don't want a particular coverage, what that could cost them down the line. And at the end of the day, it's their money. I can't tell them how to spend their money. I can only advise. On the commercial side, which this, if they really don't want a very important coverage that they have to have, I won't write it.
Yeah, we'll walk away. But
I'll walk away. I don't necessarily do that on home and auto, but on commercial, I'll walk away because it's more important that I maintain a level of being able to sleep at night, because I've written those policies in the past when I was with another company, and it just seemed like it inevitably ended up hurting the customer. It didn't hurt me. It hurt the customer. And I don't want to hurt my customers. I care too much about them. My clients, not customers, or clients. Remember we talked the difference between a customer and a client? Mm-hmm. We want clients. So anyway, I heard you breathe in. You had a
well, I just, heavy breather over here.
That's what her husband said.
Jesus.
Well, you snore. That's what he was talking about.
Okay. That's fine. Let's go with that. That's totally fine. Yeah.
All right.
Anyway, just specifically on the home and auto and for new people getting into the world of insurance, if let's say we're talking to you and we're like, hey, 100, 300, 100, that's really blah, blah, blah. And you're looking over the bills and you're like, I can't do it. Really, I need to stair step down one. That's fine. It's making sure, again, find somebody who will have the conversations with you, and not just you, but obviously we're talking to all of the newbies out there and young folks, and also who will say, okay, and the plan is as soon as we can bump you up, we're going to bump up. So we're going to talk to you. If this is a 6-month policy, we're going to talk to you in 6 months. Hey, Stephen, where are we? How are we feeling? What's going on? Here are the rates. Let's look at it again. If it's an annual policy, hey, Stephen, love this. How did everything go? Great. Okay. No accidents, no tickets. We love this. All clean.
Mm-hmm.
Here's what it looks like stepping up. Doesn't mean that you have to be ready at that time because everything else is also going up, but it's having those conversations. And that truly is, people have to make sure everybody right now, they want to go online and they want to shop and they want easy, they want quick, they want now. But then when that problem comes that they don't even know was a problem that could come, who the hell are they going to call? Right. So I would encourage young people, encourage you. And you seem to have a contact back home where it's a friend's dad and he has conversations with you and you're willing to have them back, which is awesome. But so many young people, and it's not just young people these days, but
Just
nobody
people in
wants to pick
general.
up the phone.
Yeah.
So that is my number one where I would really encourage people
And I will tell you,
pick up the phone.
let me go with that. A lot of people do go online and get it, especially the younger generation. Insurance companies love that.
Ah,
They love it.
it's the same rate. They just don't have to pay an agent.
They don't have to pay an agent, but it's also those people that are going online don't understand what coverages they're not choosing that they need.
100%. Yes.
And so that means insurance companies don't have to worry about paying it because you didn't get that
And
coverage to begin with.
nobody advised them. So there's no E&O claim.
Uninsured,
There's-
underinsured. What's that?
Yeah.
I don't
there's-
need that.
So
Yeah, you do.
yeah. And that's the,
In Texas, you do.
yeah. And there are plenty of agencies out there and we've toyed with it and we just can't quite bite the bullet with the personal lines for the most part.
For what? Doing it
Like-
online?
No, like policy fees.
Nah, not big on
It's
those.
just, no. So like, but there are plenty of agencies out there where they're like, oh, well, we're going to shop for you and you're going to pay us directly.
$150.
Yeah. And like we don't. And there are plenty of other agencies who don't. So finding somebody who will work, get the policy, and then not charge you for their service.
Yeah,
They're
so-
getting paid by the company. And
Yeah.
again, to Dennis's point, if
Yeah.
you shop online,
Hear me out. It goes back to people aren't choosing all the coverages that they need when
Fair.
they go online. So insurance companies are like, hey, win-win.
Yeah.
Win-win. We don't, chances of them having this type of claim is fairly high, but they didn't choose that coverage.
yeah.
Yay me.
And how about rental car coverage?
Oh.
So,
Who needs rental car coverage?
well, exactly. Nobody.
You know what that is? Rental car coverage?
Yeah, when you rent a car and have coverage over it.
Nope.
Well, no.
Nope.
No.
Okay.
Let's say you have an accident
Okay.
or you have physical damage to your vehicle that's covered by your policy.
Okay.
Hail damage, whatever it is, tree falls on it. You got to get it fixed. You hit something.
You're out in the sticks, right?
Yeah.
Yeah.
So a deer runs into it.
Yeah. An owl
Park-
goes
no,
through
just
your
kidding. No,
windshield.
whatever. Yeah.
I mean, I had a buddy who lives literally down at the end of the street from you. I think it was him, either had a deer or an owl go through his windshield.
They'll cover the rental fee for getting a
Bad
rental car while your car gets fixed.
Yes,
Yes.
that's the
I
rental
got
car
you.
coverage.
Okay.
Yeah, it pays the $35, $40 a day.
Oh wow.
Up to, I will say,
It's usually
this is
30 days.
it's 30 days. And when because even now we're still having issues where there are like repair shops and they can't get all the parts.
Mhm.
So so hang on. So two things. First of all, 9 times out of 10, people need rental car coverage. Even if you're like, well, I've got 2 spare vehicles in the driveway, it's no big deal. So if something happens to my car, I can just drive another one. That is fantastic if you never leave the 50-mile radius where you live. But if you ever, even like a day trip or a weekend trip to Houston or Austin, or hey, I'm going to Oklahoma and Broken Bow, like that's going to be an expensive Uber home to your car that's sitting in the driveway opposed to having a rental car. Does that make sense? Like you're on a family trip, something
Mhm.
happens, or in your case, you're out with some buddies and you guys are road tripping it, something happens to your car,
Mhm.
then you're paying for your rental yourself. And by the way, right now, you can't even rent a car on your own. You're 24, so you can't even go to a rental car company. So the fact that some of these agents will write policies for young people with no rental car coverage is absolutely, it blows my mind.
Yeah, it's tough for young people. And she makes a valid point.
Thank you.
Then
It's on
that,
record.
but it doesn't matter if you're young or stuff's expensive.
So expensive.
I mean, we've talked about that. in, I think it's the last episode or the first episode, the cost of eggs.
Mm-hmm.
Compare that. Why is my insurance so high? Or have you looked at the cost of eggs? What eggs and insurance have to do with each other? They just both are expensive.
Yeah.
For various reasons. Nothing's cheap anymore. Unfortunately, we've been through the last 4 or 5 years. COVID really screwed things up. The freeze really screwed things up. And I'm not going to get political. I'm just going to talk about economics. When they released all that money into the system for
like the stimulus checks?
After the stimulus checks, well, that causes inflation. I mean, you know that from your finance deal. You put more money into the economy, the value of the dollar goes down because inflation goes up.
Mm-hmm.
And we're still recovering from that. And I'm not, and we had those loans, those commercial business loans, PPP loans that were forgiven.
Mm-hmm.
And that was tons of money, all that stuff. It was like a perfect, it doesn't matter if you're Republican or Democrat because they both were doing it. But there's a big ball of crap that it rolled downhill the last number of years with the weather and all that stuff. Anyway, going back to, I could keep going on that, but going back to your deal, protecting yourself the best that you possibly can. But you should shop multiple companies. I know what company you guys are with. You may be better off staying with them. You may not be better off staying with them, with that particular company, but I would shop it with reputable companies. And see what it ends up looking like.
And there are certain carriers that they just are more favorable for certain things, right? So some life insurance companies don't mind smokers as much as others. They don't mind diabetes. Others hate it. Same thing with car insurance. We have a young driver and some are like, oh, that's amazing. We would like to add $3,000 a month in premium because they don't want the young drivers, because youthful drivers, what's going to happen? It is an exaggeration, but pretty close.
The idea is correct. Yeah.
But they don't want it because why? Because you're going to get a speeding ticket. You're going to be texting while driving. You're going to cause an accident. You're going to do typically, and that doesn't mean that older drivers can't do it too. It's just more prevalent with that. But, and then there are some companies that are like, oh yeah, no, we're just going to rate it. They're just, so again, I keep going to the agent thing, but having an agent or a broker who can navigate that and be like, this company is just, we'll try it, but we know it's going to come back and they're not going to like you. They just don't like everything that's happening right now.
Yeah. We usually know.
Yeah. And because they've got trends and different things.
That company, there's not going to be any good for you.
But going out to other people, not just Steven in the room, anybody who's listening, is just know if you get a high quote, it may be because you caught that company that just doesn't. If your family has used this company for 30, 40 years, doesn't mean it's going to be right for you going out on your own. So, but yes, pick a reputable one. Ones, right? Like continue to get the quotes and then ask the questions and go from there.
Or go with a broker that has appointments with all those companies and let them quote it for you.
But you can't have appointments with all of them. We can't have all of them. There are captive agencies that we don't have access to.
Yeah, but there's not any captive agencies we want. So,
well, but some are not bad with youthful. It's just, again, like but we do that all the time. We literally send people to other carriers.
We have, that's correct. We can't help you. Why don't you try this one out?
We know this is going to be better for you. And then
we have friends that we've sent to other carriers.
100%.
It's just the right thing to do.
Because you will come back. It will make sense for you to come back to us at some point. And so the whole thing is just really, so anyway, just find those people and who your friend's dad or whatever. But I want to touch on the rental thing again, because it is a big deal right now. So for that youthful driver or that new insurance carrier who does happen to get in an accident and it's their fault, if it's somebody else's fault and the other insurance company is paying for it, there is no time frame. There's no limit. If it takes 2 months for your car to get fixed, they're going to pay for 2 months. If it's your policy, make sure you choose a body shop. You're allowed to choose whichever body shop you want. Let the body shop know, here's the estimate. This is what's going on, and work with them and say, hey, I need you to order all those parts because we don't have time to wait. And then sometimes going back to the supplement thing, They're going to take a piece of the car off and they're like, oh, well, that hole under the fender is smashed. We have to order parts. That's where you can get in trouble. But we had one client where their headlight had to be removed and replaced. And it was one piece to reassemble and like put that headlight back in. Couldn't get it. That piece alone took 3 to 4 weeks to get, but he couldn't drive the car. He has no headlight. So everything else is fixed. And now you have a non-street legal vehicle and his rental ran out after 30 days. So it's just, you got to be aware of that too. Some things are unforeseeable and you can't get around it, but just work with a body shop and all. Just little tidbits. That's all, right? It's all information, little tidbits.
Yeah. It's tough.
Don't get in an accident.
Yeah.
That's my, I guess, first and foremost tidbit.
That was one question. One easy question. See how much there is to know about insurance? One question. We didn't even cover everything. We didn't talk about uninsured, underinsured hardly at all.
But
we didn't talk about medical expense coverage. We didn't talk about personal injury protection.
Oh, we'll talk about that.
We didn't talk about comprehensive and collision. We didn't talk about towing, things like that. I think that's the thing is that I think that most people don't understand how complicated and how much there is to insurance. That's why it's good to have an agent. But medical expense.
We're close to the end of our time. But go over the quick differences and then.
So medical expense pays for the medical expenses that are the people in your vehicle, but it's a limit of how much it will pay. It has nothing to do with the liability that we just talked about. It's
everybody inside the car.
Yeah, people inside the car. So let's say you and I forgot your girlfriend's name. I'm sorry. Caitlin are in an accident and you have medical expense coverage and she has to go to the hospital and there's medical expenses. It will pay her up to whatever medical expense that you have. She can either go to the hospital or you can pay her directly for medical expense. But if she has health insurance, it will coordinate benefits with that health insurance.
Okay.
So if the health insurance kicks in and she only had $1,000 deductible, but you had a $5,000 medical expense coverage, that little bit, then it may only pay the gap and that's it, the medical expense portion. Now, there's another section called personal injury protection. Personal injury protection includes medical expense. It includes a death benefit, like it'll pay toward your funeral. It'll pay for essential services, like if you can't work, you got to walk your dog. It lost wages, but medical essential service, you got to pay somebody now to do your laundry, walk your dog, mow your yard, things like. It'll pay for that. It pays for lost wages, and there's a limit that how much you choose that whenever you buy it. But it will pay everybody in your car, and it can pay them directly, and it does not coordinate benefits with your health insurance. So if you have a $10,000 worth of coverage for that, it will pay you $10,000. It will pay Caitlin $10,000.
Okay.
And you can use that for whatever you want.
And they had me in the trunk, so I also get $10,000.
And she gets $10,000 too.
That's right.
Yeah.
Done.
So, but yes, it is a great coverage. In the state of Texas, if we have to offer it, and if the people don't want it, they have to sign a document waiving it.
Oh, wow.
And if we don't have that document signed and there's a claim made on it, the insurance company has to pay it. Then they come after us for reimbursement as the agents.
Yeah, it's a state thing.
But the difference in cost between personal injury protection for all those benefits and just medical expense on its own is so minor that we just give everybody personal injury protection. It's not, we're talking $1 a month, maybe $2 a month or pennies a month. It is so inexpensive. Everybody has it.
I got you.
And so we just write it with it. It's easier and it helps them out because if they have an accident and there's an injury, they get a little cash or they get a check of some sort.
And the last thing I'll say, and then we'll close this out. But on the PIT part, personal injury, how often you get in an accident, people are on their way to work a lot of times. And then a lot of people work hourly jobs. So if you missed 3 or 4 hours of work because you were dealing with this accident.
Mhm.
Do you know what I mean? Like that these days with people living check to check,
Makes a difference.
that's huge.
Mhm.
That could be just a game changer for people.
Yep. I agree.
So anyway, and then it's a big deal. So keeping all of that in mind. But we are at the end of I'm going to say under the end of the hour.
End of the hour.
We were not an hour, so you're welcome for that. But Stephen, thank you so much for being here and asking the one question that just let us rattle off. And
let me say if somebody comes to us and they ask us this question, we are not going to spend an hour on one coverage unless they want us to. Then we will.
Fair,
but we're not going to spend an hour,
folks. Yeah, no.
This is just to explain a little more.
We're a little faster on the phone, but anyway, thank you guys so much. Insurance Gone Wild. You can find us at what is it?
IGWpodcast.com.
Love that.
IGWpodcast.com or Facebook.
Love that.
In Insurance Gone Wild. Just look up Insurance Gone Wild, hit the like button to follow. And
Yep. And then if you have any questions that will not take an hour to answer, 817-753-0093. Thanks guys so much.
Thanks.